Well, let's take a look at the long-term structure of the euro dollar and the yen, with the dollar being the center point. Right down the middle there would be the dollar, and the this is going to be a time structured view of where the market, this is one period moving average, so basically this is the real first beat. This is the kick drum of the market. So I'm kind of ignoring the this would be like trading without a stop, because you really would just literally take the trade of having a buy limit sitting at this time top, price over time top, and just getting filled. Now the backlash, the problem is why that wouldn't work in the real world is that if you did that, if you try to do that trade here, this big wick, it could be totally stopping you out. Like if you went short on a break of a trend line, and this is the problem with considering the resolution of any pattern. If you think that you would trade this breakout here for your targets down here, if you tightened up your stop here, you're always in this quandary issue of this is the monthly chart, and this could be the 5-minute chart, but this is always the big problem. You know, this is the triangle breakout, and this guy would assume that he's right. It's like, look, I'm right, but the first fill on that on the south side would have been all the way to here. If you didn't take anything off that table and you had protection here, they crushed you there, and then it finally hit your target. So this is always what's going on in these markets. This fractal top in time, and it's not the breakout entry. So if you're running two styles of entry here, if you're going to do a dual style system, but you probably want to keep it on its own isolated broker. But here's clearly the double bottom, and this would be the trap where they trapped it and they come back and they would stop you out. So you can't just rely on pure like there's a way to forecast the direction and still never make money. This is how it is. It's brutal. Now this big pivot point here, but here the question is this thing going to keep going? Well, it kind of looks like it here, but the trade here obviously was going to be on the you zoomed in to the weekly. It was always going to be this this double tops becoming a bottom in time. But see how it cuts through? See how it would, you'd have to have, and if you did even have a stop here, this was the big crazy sell-off in the stock market right here, dollar yen, and so the obviously the buy limits would be sitting right here, or the buyers are going to come back in this window here in this trap zone. But yeah, the end of the year is coming, and so the weeklies look like the best thing to look at, because you got 52 period moving average there, if you consider that you're going to just go the one period moving average. And the and I just put the grids in there, so if I got on a smaller time frame, but since the market's closed, it's not going to repaint this. If a tick came in right now, they would just repaint the whole grid in there. So I don't know what that was about. But yeah, so this is you know, we've almost come back to this double bottom in the euro. So the next, certainly a big resistance point, which we kind of almost tagged it a little bit, and it looks pretty dramatic on the smaller time frames, but this is nothing more than, for the if you consider this to be nothing but a bear trap for all the trend traders, are totally thinking, well, we're just going to sell back up in this fair value zone. But the problem with these situations is when it pauses here and it comes back a little bit, and then it doesn't go the way people think it's going to go, we still have this giant crater of, I mean, thousands of, you know, what is that, 3,000 pips or something, 300 pips, I don't know, 3,000 pips, yeah, it's serious, you know, I mean, it's unbelievable, and then plus it was also the trap here. You know, when this goes one notch lower here, eesh, I'll try this, grabs these guys, we're already above that. So the contrarian entry of getting in here on buy limits, if you could survive this where it went down to a new low, this is why on if this was a 1 hour chart, you'd have the buy stops here as it crushes back through. What used to be a buy limit can now be a buy stop. At that pivot, that's how you would treat the pivots. And here you're always like, hey, yeah, psycho price, and this happened in 1 hour. They just nicked that bottom. Here the dollar yen is just crazy, just absolutely on a blistering move, and it's, yeah, it's itching. It already broke out. I mean, it's itching to go through the ceiling, but it's always going to be a trap and rip back. You know, that trade's always in there, just like this one was. But I'm thinking, yeah, I'll buy. I had a buy limit sitting there. If they change now, we're supposedly going to get this, which has been waiting, I don't know how many years for the Fed to change a number, because they can't, or they just, I guess gridlock for that is pretty good for the market. The fact that, and markets are self-healing all the time, so the idea that this is going to happen, that's going to happen, well, I mean, the price you're looking at, you know, everybody's already callous to the price. You know, people get callous and they get used to a price. So, and I mean, gasoline dropped in price, and you know, that was obviously going to happen because people just said, well, I don't even have a job to go to. I mean, obviously the demand was going to go down, and crude oil at 200 a barrel. I mean, when the people call for gold at 5,000, well, you might have to see 550 in gold again, right? Before people say, oh, that's half off, I'll go for that. I mean, half off from here. It never seems like, and that's a big problem with relying too much on a triangle. But if you know how to play it, I suppose, right? You know how to play these setups, and also the ATR is really critical, because if you're used to certain moves only taking so many pips, and all of a sudden, this super quiet zone here on dollar yen, well, you know, something's got to give. And, you know, just pure blind trading this thing, you're making money. Because you're just trading a break out of a small range. That's like about 100 pips there. Let me turn on my pip gauge there. But look at this time frame here, 4 hours. This market's not going anywhere for 2 weeks, for 3 weeks. After this wonderful stair step here, where every top became a pullback, didn't quite get your fill there, and then zoom, drift back. But you know, come on, this is 20 pips from here to here. This is the 10. This is the dotted line's 5 pips. So if your broker's tight, this broker's under a pip. Dollar yen. Now you can trade dollar yen really cheap. And certain brokers have a better price on dollar yen as far as the spread, and you can go super tight. And then you're just like, you know, you're just making money on these stupid 20 pip slams to make 40 pips, and you can see how tight. If this spread stays under a pip, you can see that, yeah, you could buy at the 20-yard line and ride it to the 40, and you could also have a whole cluster of buy limits underneath where you know, well, that's obviously where they're going to go after this price. They actually never got that price, but if you just consider this bottom, if this was, you know, it's 40 pip window here of total it's so much money on this chart. I mean, from both directions, and it's just to say you're a trend trader and get in here and get out here is a little bit daunting to ride these pullbacks. And here you say, wow, man, geez. And you didn't get out here, and you came back to here, and you're like, well, my target's up here. Now you waited about, you waited 2 more weeks, and now you just kind of, but now this is the point we could probably start seeing the first channel form. If you're a channel trader, you're already thinking, well, this is the shoulder. But of course, this thing could just squirrel away. Like when this squirrel gets to the middle of the road, he has that moment of truth. Is he going to cut and run, or is he going to go back to the safety zone? And this is always the edge is a safety, plus the center is always a safety. So I'm thinking, oh yeah, I would buy the dollar yen down here for a bounce of 20 pips all day long with a buy limit. Let's put a pile in there. Now the thing is, if you have a 20 pip grid and you know the if you're going to drop orders literally on every 20 pip thing, it's going to look like this: buy limit, buy limit, buy limit, buy limit, buy limit. You got stops on there of say 20 pips. Well, you get stopped out of this whole thing, right? Down to this last order. But if you drop them on the 10s, right, you capture this whole zone here, and you've got now you want to make up an array of, say, your tightest stop is 5 pips, and you have a 10 pip stopper. So even when it comes down every in other words, at this price, you're going to drop, at the 20, you're going to drop one that just makes 10 pips and one that makes 20, risking 10. It's double your money. Here you get the re-entry again, you make the 20, and you make the 5 and the 10 if you had a 2 pip stop. So you can put a 5 pip stop is about tight as you probably get away with. You might get stopped out of a 5 pip or 8 pip stop, but if the 8 makes 16, you're always going to make money on that. Now this is a 4-hour chart, so you got all day to put your stupid ass 20 pip grid order in. Now if you capture a 20 pip grid with a cluster of, say, 100K in there packed in here, and you take off half that position on a 20 pip, actually that's about a 30 pip winner from these guys, you already made money that. You could let the rest ride for another 40 pips up into the obvious double bottom. You know, just 1 period moving average. You just don't want to go any past this. It's too much lag. There's always going to be this huge bonus payday of putting in limits for a retest of this, which you already know exists. You know that exists. There's no excuse not to put a damn order down here right now. And here, every one of these last, no, this is 20 pip grid trading, right? And the thing is that, of course, you're not going to make money if you say, well, I'm going to put in just the same size stop on every ticket because I'm just going, it's going to the moon. That would be stupid. But if the grid's coming in, and even a little bit better is, say you have an algorithm, you write, well, you do a master drop of orders that you wouldn't want to buy right at the 20 on every ticket. So maybe you're 1 pip away. You have 5K sitting, 1 pip distribution. And inside of that is an exit to get out and make the first 20 pips. Make the first 10 and make the first 25. You know, and maybe there's a 30 in there, and you have to realize if you're trading one pair and you don't get that you don't get that target met. Now this has already made its target. That's over. That trade's over. Now it's about buy limits here, sell limits up here. Always scalps built on top of a 20 pip grid. Or you could run a 50 pip grid. Of course, you know, you want to key this time frame to what realistically is going to happen, and you can, if you can see the irrational exuberance trades where you have a sell limit here for the 20 to 40 pip pullback, and it just counter trend traded. It wouldn't matter. Just watched a video of a guy had some trend indicators saying the trend's up. I'm like, yeah, it's up until it's not. And he just he didn't show a trade. He just cherry picked the whole chart there. Of course, your brain's going to lavishly, when you see MACD up on a chart, it's like having a girl that has the perfect outfit, that actually fits her instead of wearing like overalls, unless you're into, farm girls. The thing is that you could dress up the chart to make it fit this great thing. It really may not exist in the real world. It's just a fantasy trade, and you've seen it play out before, and that script, that movie, you'll love that kind of plot, and I'm a trend trader. I mean, this thing with the trend trader guys, and I guess the only reason I rail against trend trading is because if the market only trends 20% of the time, aren't you missing out on 80% of the market? Like, I mean, seriously. So just structure trading it, right? Just having orders and without any, and of course the 1 period moving average, when it starts to go sideways flat, that's the time to put in buy stops and sell stops. You could also trade this as this is dropping. Your buy stops are stacking up here. At least there's a vacuum forming, and you're coming back to this nonsense. I don't know. They come out with this news, this Yellen. They hire people to do these jobs that are just like, oh boy, you could probably get a better performance. I could have I mean, like the guy that, you can almost teach anybody to trade the market, but it's funny how the government wants to try to micromanage that by choosing what they think is appropriate. Well, the market could care less. I mean, apparently the dollar yen has been getting along just fine, torturing anybody that is long or short this thing by just, rope-a-dope, rope-a-dope stuff. And, the trend traders will tell you about this move. And yeah, that's a lot of money, but what do you do in the meantime? Do you just watch Netflix till you get a signal from your platform? I guess you do. I guess it's all about personal, it's about personal responsibility, people. No, it's about your own, how you feel comfortable trading. But I think it's better to force yourself to do some uncomfortable trading that makes money sometimes, as opposed to the comfort, satisfying your ego. That, look, I was right about that. That trade and, taking the hit and having the skin in the game, manly type approach that's blowing up your account, which if you're stubborn, which that's what I am, stubborn. So I'm very much hold into, especially when I'm stubborn about this concept. I'm not stubborn about the well, I could be stubborn about the forecasting, and that would be really brutal because you are taking a stance that this has got to happen. Now, this is the euro explosion on the 20 pip 4 hour, and this is far. So if you choose a time frame and you choose the order placement, grid placement, and yeah, you don't want to martingale this thing. Now, you don't want to load in everything with the same stop, basically, because you do want to buy every 50 pips with a 30 stop, say, and every 20 pips with a 10 stop. So when it blows out that bank, you have an overlay of the bigger, like right here, it would look like this. Say right now the market was open, and you can't do these, you can't test this stuff. You have to wait till market opens tonight. But you just threw a random 40 pip grid in there, so it's going to buy every 40s. And for 8 hours, it's going to sit there with a 10 pip stop to make 20, right? And you got this grid sitting out here. Same thing you would do with a 20 pip grid with, say, 8 pip stops, and it's only at 20s. Then you have a 25 pip grid that's going to overlay that with a slightly wider, and you have to gauge it by the ATR. So if the ATR cranks up, like, this is going to be the dumbest trade in the world here, the euro, right? You have buy limit clusters sitting here for a scalp of, say, that many pips. Then you have, if you get stopped out of that, say you have a hard stop here, your next cluster is going to sit here. And this 20-yard line, it makes 60 pips with a 15 pip stop. And if that gets blown out, then you got the buy limit here. Now, if they do something with the interest rate, this thing could go wackadoodle like all the way back below that on one day. I mean, look at this move. I mean, this is 4 hours clean up, 300 pips. It's going to be crazy. And if it breaks out here and it keeps going, which this is certainly the classic Forex pause, even according to that guy with the fancy trend indicator on the 4 hour, he said that this is in an uptrend now. Really? So, yeah, but the pullback's going to be the brutality of it all. And how does this thing come back so anybody can think about getting long? Well, I guess if you got the patience, you wait for maybe the end of next week, you come back to here if you're lucky. People that are anxious to jump on this train are going to look at the 1 hour and see, oh, you know what? And look at this psychosis here on the 1 hour. So when you drill down on the 1 hour, you can see the devils in the details, and that these flash crashes and flash exuberances are the, when you're sitting on this with a 20 pip grid, and now you may be running a 10 pip grid, so the capture, it could sit with a 10 pip stop. The thing is, you're going to put more orders in. Probably you're going to, if you do it automatedly, you put an order, but it's really like doing painting. You're just going to sit there and place all the orders. And you just let it play out. I mean, this was a killer trade. How does this not make money? And it has nothing to do with the bias of the market. It just has to do with the fact that these are unsustainable moves. I mean, a market that can go from here up 45, almost 50 pips, smash into a resistance zone, come flying back, and then come all the way back again. I mean, the whipsaw, I think that's, I don't know, maybe the trend traders, maybe what it is that they think that it's a, that they're going to, they want it, well, they just heard that. I just watched a video. The guy just said, that's what you want to trade in sync with the market. But what about this stuff? What about all these slams? How do you make money from these? And that's what the market's known for. Anyways, yeah, that's my dollar yen euro view.